Yo, what's up, everybody? It is Thursday, January 25th. I want to bring you guys' attention back to something that I said going all the way back to 2022. And I spoke about it in these videos, and I said one day we are going to revisit this commentary, this discussion, because I told you guys that it was going to play out exactly the way I said it was going to play out, and that was to the contrary of everything that you may have been hearing at that time from the media and Wall Street and economists and pundits and everybody. I said, listen to what I'm telling you, listen to what I am explaining, because it is going to play out exactly as I am saying, at the time, as I said at the time. And it did. Exactly. And once again, I'm not talking about this to, pat myself on the back. I'm just talking about this to show that when you are educated and when you are informed and when you understand how the monetary system functions, and that has nothing to do with this kind of mythology that we hear all the time, which is so infused into, this monetarist paradigm that everybody runs on, and which, by the way, they don't really even understand. And I'm going to talk about this in a second. That's really the only information, and that's even the wrong term, the wrong noun. It's not information. It's a kind of a mythology. It's like a belief system which is pervasive, and it is completely wrong in its understanding. So like the specific thing that I'm talking about, and you guys are going to remember this when I bring it up right now. Remember back in 2022, in the lead up to the Fed raising interest rates, and at the same time, the Fed was saying that it was also going to reduce the size of its balance sheet. They call that quantitative easing, okay? And there was a lot of concern and a lot of fear surrounding this quantitative easing, that the Fed was going to reduce its balance sheet. And what was on its balance sheet? The Fed, up until that point in 2022, and because of, prior to that, the pandemic, it was buying trillions in assets, and those assets were primarily, or they were completely, government securities, treasury bonds, treasury notes, that sort of stuff. And I said that those fears over quantitative easing were totally unfounded. And I went on to say that actually that's going to be bullish. And all these people who were predicting these dire, results from that, a crash, a market crash, an economic collapse, a depression even, some people were saying, I said that's not only is that not going to happen, I said it's going to be the reverse. And I explained why. I said in the period, from the pandemic until mid-2022, when the Fed increased the size of its balance sheet, like all the way up to over 9 trillion. What were they doing? They were removing high quality assets from the economy. Treasury securities, government securities, which had a higher yield than cash, than reserves. And I said when the Fed starts to reverse that process, QT, quantitative easing, what that equates to is the Fed returning those assets back into the economy where they belong. Because don't forget, when the Fed removed those assets, the Treasury was paying interest to the Fed, which was interest that could have went into the economy. And when you think about it, it's so ridiculous because the Fed is part of the government. I know a lot of people are going to argue about that. I'm not even going to get into that. But I mean, it was like one part of the government paying interest to another part of the government. And it was also like for the trillions of securities that the Fed removed from the economy, they could literally rip those up. They didn't need those things. And that would have reduced the so-called, national debt. But again, that's a whole other discussion. But it would have been totally valid for them to tear it up. The Fed doesn't need that. It doesn't need the income. We see that right now, that the Fed's income is negative, okay, because it's paying all this interest to the banks. The Fed's income, the Fed's equity is negative. And it doesn't stop the Fed from operating as normal. That was another thing. Remember and I told you that was going to happen long time before it actually happened. I said, there's going to come a point where when the Fed raises interest rates, the rate that it has to pay on reserves is going to exceed the income it gets from its portfolio. I said that years before it happened, and I even gave an amount. I said it was around 2.5%. If they raised interest to 2.5%, they would be breaking even, and anything over 2.5%, they would be negative. I said that years before this actually happened, and that now it happened, and like everybody's like, oh my God, the Fed's running negative equity, running negative income, and I said it doesn't matter. They could still operate under those conditions. I said the only thing, back at the time when I said that, I said the only thing would be, would that create some kind of a political, situation for the Fed where Congress would say, oh, you're not, transferring that money to us anymore every year like you're supposed to. What's going on? But that didn't really happen either. So let me give you some numbers. So from April 2022, that's when, that was the peak in the Fed's balance sheet when it was like just over 9 trillion. I think it was like 9.014 trillion. Let's call it 9 trillion. Since that time, and the S&P at that time was at, it was at 4,200. It was on a decline, because the Fed started raising interest rates and all the monetary zombies, they were panicking, they were selling. So 9 trillion, okay? It is now at, it's down like 1.3 trillion. It has shrunk by 1.3 trillion. So it's like 7.7 trillion right now. 1.3 trillion shrinkage in the balance sheet. And what happened? The economy's growing. We saw fourth quarter was growing at 3.3%. The stock market is at an all-time record high. All these things I said, which were going to happen, they happened. And again, I'm not making this video to say, oh, I'm great and I'm so smart and blah, 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 and, patting my... No, it's just like when you understand. And I told all you guys, don't get all, worried about this. Don't listen to all these people. They have it completely wrong. And so we see the outcome. And again, I always come back to this. Do these people go back to their theories and question why it didn't work out in the way they thought it was going to work out? Absolutely not. They never do. I mean, the arrogance among this group, and it's an enormous group. I mean, it really includes everybody except for like me or a tiny group of MMT people who understand. And you could even take that group even smaller because there are MMT academics out there, people like Stephanie Kelton, they're not, as far as I know, there's nobody really like me who is a trader, an investor who uses MMT to make investments or to trade. But anyway, that's neither here nor there. What I'm saying is that these people, the big group, the monetarist zombie group, you know, the mythology believers, they don't go and say, gee, why didn't that happen? And by the way, just, you know, in a more recent sense, when you go back, remember earlier in 2023, last year, when you had people like Ray Dalio, right now, no, I'm sorry, and coming into the fourth quarter, remember, I talked about this. When you had people like Ray Dalio, when you had people like Paul Tudor Jones, the man with 3 names, when you had people like Jeffrey Gundlach, when you had people like all of these guys, remember when we came into the fourth quarter and they were saying the Treasury is going to have to issue a record amount of securities in the fourth quarter of 2023, and that's going to be a disaster. That's going to be terrible. We're talking Ray Dalio, we're talking Gundlach, we're talking Paul Tudor Jones, we're talking Bill Gross, maybe was he, all of these big shots. It's going to be horrible. It's going to be a disaster. And I said to you guys, it's nothing, because the money is already there. They don't understand this. The money is already there. The dollars to buy treasuries comes from government spending itself. Government spends, it goes into the economy, into the banking system, and then when it sells securities, that's just simply a reserve drain. That's just people or institutions exchanging reserves, cash, if you will, for a treasury security which earns more interest. There was and they were talking about it was going to be a tsunami and you know, all these terms like, which would, you know, conjure up this picture of this giant crash, just the worst possible scenario you could think of. And that's what they were talking about. And I said that that's just a total lack of understanding. And they expose themselves every time. And now they're silent. You don't hear anything from these people. Market's at an all-time record high. But the funny thing is now what are they all now? They're all bullish, right? They're all bullish now. It's like, now you can go into the stock market. Well, when I start hearing stuff like that, I get a little bit concerned, because these are the same people who predicted, you know, the worst of the worst, the doom and gloom, the crash, the dire circumstances. Now they flipped around, and you have to really be careful, because they have exposed their understanding, which is zero, backwards, okay? So now I'm on the lookout for things which could be problematic. And I see a couple of things which right now for me, they don't look like that serious. There is some, what's a word I could use? Deterioration, contraction in the year. If you look at year over year flows, not the leading flows, but the net flows. Okay, those of you who are subscribers to my report, you know what I'm talking about, because I've been mentioning this every single day. But that contraction right now, it's kind of minor. I don't think it's going to make that much of a difference. Now, if it continues, you know, it's kind of like, let's say you have a health condition and you go to the doctor and the doctor says, well, I don't like, you know, the looks of these results, but right now we're just going to monitor these results. If they get worse, then maybe we have to do something. But right now we're just going to continue to monitor the results. And that's kind of like, You know, if I'm going to use an analogy, that would be the analogy I would use right now. Like right now, I'm monitoring the situation. And I'm monitoring that situation closely also because these know-nothing guys who got everything wrong have now flipped around to the other side. That makes me more concerned than anything else. Okay? So anyway, that's what I want to say for today. Don't forget, go to my website. Go now. Sign up for a 30-day free trial of MMT Trader. Go to pitbulleconomics.com. I'm the only one who has an applied approach to MMT. Nobody else does that. I show you how to take the concepts and the understandings of modern monetary theory and use that to invest profitably in the financial markets, and not to get panicky and not to get scared. And when you have understanding, okay, it's like a power. Nobody's going to frighten you. No headline, no something could happen. You could rationally look at that and understand what's really going on, you know, beyond the crazy headlines or comments that people make. You're not going to get frightened. You're going to be very emotionally calm and mature and able to handle these things all the time. Okay? So that's it for today, folks. And where's my little clicker here? Got this thing for the camera. All right. See you tomorrow. Bye.